Hey guys, welcome back to the channel. In today's video, we're going to be going over the exponential moving average and the simple moving average. So real quick, I'm going to show you how to set this up on your Thinkorswim platform. So again, you go to Studies, Edit Studies, and then you'll see that these two right here, simple moving average, moving average, exponential. If you just type those things in, simple moving, and you right when you start to type it, it'll just come up fairly simple. You'll double click it and it'll be over here in your price section. Then once you get that one down, then you would go to MOV AVG, and then you'll see exponential, and you'll add that one as well. Okay, the reason that they're on the price section, guys, is because this is price action. Okay, these indicators are showing basically price action. They're kind of lagged behind based on what has happened to that price on the particular stock. Okay, so before we get into that, let me show you the settings that you need to have these on. So for your simple moving average, you're going to click on the edit button, and this is what you should have: price, close, length 180, displace 0, breakout signals, yes. And then down here, you can kind of make this your own values. I keep it numerical. The line, you can kind of tweak it and put whatever design you want. I prefer a solid line. You can make it a little bit thicker if you like. You could also change the color. So for my simple moving average, I like to have it as red, and I'll show you why in a second. I would just hit OK. For my exponential moving average, I'm going to get close, length of 9, displace 0, breakout signal yes, and the same thing below. But for me, I want to have a different color line for my exponential as opposed to my simple moving average, just to differentiate the two. So I changed the exponential moving average to green. Hit OK. Once that's set up, you would go down here and hit apply, and they would actually show up on your Thinkorswim trading platform. So if you watch the last two videos, you understand what these red lines are. This is your Fibonacci retracement levels. If you look down here, this is your RSI. So the difference between these two lines, okay, this green line, remember, is our exponential moving average. All right, and basically this price action here is helping me identify the strength of the price of this stock over a certain time period. So I'm on the 180-day 4-hour time period. If I change it to the 180-day 1 hour, it may look a little bit different, but it's going to basically show me over that particular time period the price strength. Okay, anytime that a candle closes above, okay, a green candle closes above the exponential moving average, that's a good sign of price strength. All right, anytime that a red candle closes below that exponential moving average, it's showing me that the price action and the stock price is potentially weakening. As you can tell here, anytime it closes above that particular line, what happened? The stock price went up. Anytime that it closed below, now what happened? The trend started to reverse, right? And then if you watched our other video, I can either redraw this retracement level here. We'll go back and draw our fib level. We are now at a point of resistance at 1329. So if it busts through 1329, we have some potential for upside, like we talked about in my other video. However, we want to make sure that there's one green candle close above that exponential moving average before I would take a position. Especially, I want to make sure it gets above this resistance level, because that can tell me that it has some room to run to the upside if it does that. Now, my simple moving average, which is the red line that we created, is basically called the trade line. So this is more of like a longer term to help spot a potential uptrend or downtrend. Okay, every time basically that the exponential moving average crosses over the simple moving average, you have a potential for an uptrend or a downtrend, a reversal. So if you look back here, once you had one candle close above that simple moving average line, what happened? We started an uptrend. Okay, and every time that it's going to fluctuate, it's going to go up, it's going to go down, but as long as it bounces off of that simple moving average, that is a very, very healthy trend. Okay, now here, the way that this stock ran all the way up almost in a straight line, that's a very, very big red flag for me, because it tells me that I'm going to start seeing some people taking profits, and it can't maintain that type of momentum forever, right? So it's kind of basic common sense. What goes up eventually has to come down. So I'm being patient with this stock here because I do want to take an entry on this stock eventually. And as the time period goes on, this line, you'll start seeing this line actually form longer. So if for some reason this stock would start selling off and cross over and go underneath this simple moving average, then that's going to tell me that I have potential to see a lot more downside. Okay, so basically if it crosses over and above, I have potential for upside. If it crosses down and below, I have potential for more downside. So if I'm going to enter a trade, then that actually helps me identify when would be a good safe entry and exit point. So if I use Alibaba as an example, I was thinking about getting into this trade a couple of days ago. Just based on the RSI alone, I saw how undervalued we were, and I knew that eventually we were going to come back up, at least temporarily, right? So that's what happened. It shot up, but then what happened here is we're selling right back down, but you see it has not made that crossover yet above that simple moving average. I would feel a lot more comfortable long term on a swing position if this stock rode up and got above that simple moving average. Then I may feel comfortable taking a swing position and riding it up, obviously putting a stop loss on it. But as you see here, this was a very, very large uptrend. And again, stocks fluctuate all the time. What goes up eventually does come down, and vice versa. What comes down eventually does go back up. So if you look at the Fibonacci retracement level, we have basically two more levels that if this stock continuously sells off, there's still room for downside on this stock. Do I think it'll get that low? I don't think it will, but you never know, okay? But that's why we use these indicators, just to help us make a better educated decision on when to enter and exit a stock. So anyway, I hope this video helped. If you found value in today's video, hit the like button, share it with a friend. Don't forget to subscribe and hit the notification bell. That way you can keep up with our channel as we continue to grow. Other than that, have a great day, and we'll see you in the next video.